1 second. Alright, should be good. I think we're all set. I can see my screen. Hopefully you can see my screen. Hopefully you can hear me. And so it's been a while. Just a little preamble. First 5 minutes, 10 minutes. I'm just gonna warm up to speaking, and basically I'm just gonna be putting down everything I think that is important this week to me. This is specifically just me on a Sunday, looking at the markets and seeing what I hope to anticipate for the coming week. I have not looked at the academic calendar. I have not even looked at the charts, to be honest. I did my Friday logging and then closed out, and the only time I looked in the charts was for back testing. So that was much older data, like years ago. So nothing to do with today's market. I should be able to see the chat, hopefully. So let's see. Nope. That's strange. Alright, that's okay. Who cares? Something new that I'm going to be trying out is going through the trading plan development spreadsheet and kind of matching my analysis with it. Just running through all those questions and seeing where my analysis leads me. So now something that I need to work on is recently I've been, I guess, over planning my not even my analysis, actually. This is more to do with streaming. Over planning what I say on stream. I don't know why I'm very hesitant to say things on stream, and I'm always nervous that the wrong words might come out and I'll go into a tailspin. But I'm just gonna go with the flow, and hopefully the more I stream, the more comfortable I get. So that's the idea. So am I gonna be listening to music? Maybe, but I'm gonna try to start without music. So let's see. So how do I do my analysis? Well, first I'm just gonna do my logs. So I would log the market on Sunday, and I'm going to show you how I use this object tree. I'm not really going to talk about it too much, just kind of take note of how I have everything. So these are my opening range gaps for each week, and so I can go into here and enable and disable whichever ones I want. So these ones I don't really need. All these older ones, it's about until week 42 and 41 and on where I really do need these. So it helps me stay organized. Same thing with new day opening gaps and true day opens. So these ones, initial liquidity, this is a PD array, or I guess a method that I'm still nailing down and learning. So I don't have it for all the weeks, because I believe that if I don't understand the concept and I'm just throwing in lines on the chart, then they're not pertinent to what I am looking for, It's not what the algorithm is referring to. And hopefully, give me 1 second. I just had to grab water. Nothing flashy today. No serious callouts. Well, I wouldn't say serious. Everything on here is serious, but nothing crazy. Alright. Let's get this party started. Yeah. So this is my monthly chart. It's gonna be like this. And the way I'm going to screenshot this is using a script that I had made for myself. Well, actually, I'm already messing up. Start with the dollar analysis. The dollar index. I know if I put music on, I'm not going to talk, so let's just get a fat majority of the analysis out of the way, and then maybe I'll listen to something. Till then, no. Let me tweet this out also. Told you 10 minutes preamble. I'm so out of rhythm. It's unbelievable. I don't even know how to get to my YouTube, bro. There we go. Alright. And I hope my mic is good. Alright. Tweet sent out. Let's continue. So we've traded up from October. Let's risk off. The dollar goes higher, and foreign currency and indices and all assets go down. So this is where the dollar came from here. And I'm looking at the bodies on this wick. It's nice, but the body originates the move of real liquidity, so where institutions are looking. So we've went up, opened the next candle for November, and then the Trump trade essentially led us up into this buy side here. So note how we're trading into a premium array. So that would be this low, and this is the consequent encroachment, and this is the high. So I wouldn't use this for targeting right now. I'm not really expecting this right now. And the way I would kind of work through my levels is I only have two levels above this closing price and this high, and that's this consequent encroachment and this high. Now I can break this down into gradients, but I don't think that's necessary right now, especially not on the monthly chart. If I were to go down into a weekly and daily, yeah, you can throw gradients on that. But for now, it's important to note this buy side right here. And before we reach to this consequent encroachment, we have buy side here. So the main question that I would ask myself is this buy side next? If yes, then I'm specifically focusing on ES and NASDAQ. So when I say indices, that's what I'm looking at. And you can group in the majors in there because they're going to all move in sympathy. But for my own analysis, I'm only looking at NASDAQ and S&P for today. So if yes, so basically the way I would word this as simple as possible, I would look at the high, 107,348. So 348. If yes, this buy side, then indices lower. Now, do I need it to go any higher than that? No, I'm just kind of basing the trade premise or the idea on it reaching there at some point in time. Now, on a monthly chart, it looks like it can continue up there. It really does not need too much more room or expansion higher to get there. So that's what I'm looking at on the monthly chart. You can see we've also expanded above this previous month high. So yes, we're in a premium. But the way I'm looking at this is, if we are going up higher and we continue to push up higher, that's really bullish for the dollar. And it's going to lend well to risk off ideas, because this is a pretty large premium array, and the fact that we're continuing to push higher and we've set the stage from here. So I'm looking at where we came from, where we are now, and where we're likely to go. Very simple. Look at my cursor. Where we came from, where we are now, and where we're likely to go next. So that's what I'm thinking. And so I screenshot that on my chart if you are following along. Alright, weekly chart. So something I like to do is, this is my monthly frame. It's important for me to catch all of these candles, all of these, up till here, this specific one. And then what I do is, when I go into the weekly, it always sets me at the same candle. You see that this is the last candle. So it's always the same thing, which is really nice for trading view. Cool. So we had this weekly inversion fair value gap, SIBI, from 2023. Sorry, 2024, not 2023. You'll see why I got mixed up with that, because we're going to be bringing up some levels from 2023, which is pretty interesting, right? How the algorithm pulls up levels from 2023. I don't know. Anyways, we came into it, hit it, kind of retraced lower, and then this week, or last week technically, we absolutely smashed all of these targets. So, you know, it's reasonable to expect a little cool down here, but even a consolidation, just as long as it can hold its ground over here, then even a consolidation can lend well to risk off. So, and that's how the market will work. That if we're expanding up, we're bullish, and the dollar is in a buy program, it's going to consolidate, but it's still going to lend well to risk off ideas. So even if we do see a little Z action, sideways action in the dollar, we can expect a lower time frame PD array to hold it. So we'd want to look for deep discounts in the dollar, and we'd want to look for time to lend well to our analysis and sort of aid in the idea that, okay, markets are accumulating at this level, whether it be a fair value gap, whether it be well, fair value gap is, to my understanding right now, the only form of accumulation, or sell stops, really. I don't think order blocks are accumulation. Those are actually mitigation. So that's the way I look at it. But yeah, order blocks can still help with that little idea of risk off. So I'll talk about that more in the daily chart. So next, in a weekly chart, we have this high. So that would mean expansion above last week's high. So we We came all the way up. Look at the low on that candle. Look at the wick. Look at how small that is. So we barely had any room lower. Came all the way up. Booked the high at 107.064. And then retraced off the highs. Closing. And so I would look whether this was, or where the 20 to 30% retracement is. And so that would be right there. So we're holding that 20 to 30% right now. And so because right now is 11:33 p.m. and we're about to close out the Asia session and mark the new true-day open for Monday, I would just wait, but I would expect for some support to occur over here. So if it does go any lower, really I would prefer it not to go down here, but anything can happen. It can go down there and it can still be bullish. Where I would lose my bullishness, below this low right here. So now I screenshotted that, and I'm gonna go on a 5-minute real quick. I usually do this on a separate chart, but I want you to see what I'm looking for, and this is gonna be a little longer. But for the first time, I just want this on stream of how I'm doing it, so that, you know, the day that someone really wants to go back and find the gems, LOL, then they can. Real boring stuff. And my throat is drying up. And then when I draw these levels, I'm trying to be more conscious of keeping every single level on my chart important. So the best way to do that is organization. And then what I would do is drag this into the new week opening gap right here. And so I have new week opening gaps as NWOG, which is all of 2024's new week opening gaps current year, and then I have older ones from 2023. So real cool. And then go back to the monthly. Usually I wouldn't have to do this because I'd be doing it on a separate chart, and then I just screenshot whatever is, you know, drawn on the chart. But because I'm choosing to do the longer way, it's gonna take a little longer. So now you can see I have a new week opening gap right here. Give me 1 second. Alright. So I have a new week opening gap here. And it can sort of, what's the best word? we can spend time here, up and down. But what I'll be looking for is a signature that tells me that, all right, it's time to book this high. So I would like to see some sort of sell stop raid or something of that sort below the new week opening gap if it does so, and then I trust the idea that this high is going to be booked. Cool. So a screenshot of this, I think. Let's see. Alright, no, I didn't. Okay. Screenshot that. And then now, pull up all the 20... Okay, actually, before I do that, the reason I'm not pulling up the 2024 new week opening gaps is because that lends to the idea that we're going lower all the way here. I don't need all of these. I don't need these 50 lines, 16 lines. It looks messy, but it's all important to me. Each level means something. So that is sort of why I say that this low shouldn't be booked, because that new week opening gap is here, and you know, if we go all the way towards half point and come even lower here, then I wouldn't really call that bullish. I would just hold my cards close and wait to play my hand. So instead of 2024 new week opening gap, you have 2023 new week opening gaps. And these are just some levels I pulled up from, you can see October 15, October 8th, and October 1st. So really this clustering of new week opening gaps is what I'm watching, and how we come down and then start to trade higher. So I'm really watching these levels to see during the week if we go lower, if we have that sell side delivery, till where do we have that sell side delivery, and does a new week opening gap support price? And so typically there's a faster way of doing this, but I would just hide all of these like this because they're not as important to me. And that clears up my chart. So like that. So that's really what I'm looking at right now. And screenshot. And then go down to a daily. Alright, so like I said, if we go lower, the idea of accumulation at a fair value gap is nice. I'm open to it trading to the consequent encroachment and then going higher, but I'd really need something to convince me if we go to the consequent encroachment that yes, this short-term high is going to be attacked this week. Now, I haven't spoke about my devil's advocate analysis yet, but just give me a moment to go through this. So now I'm gonna turn off the new week opening gaps. And there you go. So this is the view that I'm provided when I go from the weekly chart with this as the last candle to the daily chart right here. So nice view. And also another thing is we do have buy side to the left of this. That's that monthly target that I spoke about. And if you wanted to, you can just zoom out, and there's that buy side right there. But I'm not going to be doing that. So now you can see we go into a daily chart, and there's not as much looking back. It's really just there's really no premium targets. Imagine if this was hidden right here and then that was hidden right there. So you wouldn't really have much except for the short-term high. So this is really from the monthly, weekly, and daily. If we're looking at what institutions are doing, this is the next high to be attacked. But what I'm looking at for a support of we're going to go higher is the accumulation at this fair value gap. It also could just not trade there and begin to attack this high. So that would be even better. That would be like feedback from the market that it really, 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 really wants to get to that consequent encroachment. And then any buy side that rests in between the consequent encroachment and then the short-term high, you can partial or run down your equity. So just looking in the past 3, 5, and 7 days, the daily candles, let's go through that. So we have this candle right here from Friday. That was the first down close candle after this whole run up from last Friday. So Friday, Monday, Tuesday, Wednesday, Thursday, all up close candles. This here was another down close candle, but you can see that with the power of hindsight, or with the benefit of hindsight, we have ran above that and it had no concern or no problem or difficulty trading above that. So bullish down close candles are being supported in a bullish move, so that's good once again for our risk off idea. So where would the next level of support be? Well, if we get above this, if we get above the open on this candle, after that you can start treating this whole entire candle as a bullish order block. So you can mark out the open, and then I would take this from the high to the low, and that's the mean threshold, which is basically the 0.2% retracement or 20% retracement. Alright, then we have this candle, which, analyzing, basically what we're looking at is each candle and then its 4 individual points of open, high, low, and close. So we have the high, we have the close, we have the open, and the low. And then, well, yes, we have this close as a target, but that's so small, but still that's always, 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 and never will it not be a measurement. So you can just this is like a level that you would just write on your notepad, and I would simply just write 106,867, and I would write, what is that, the Thursday, November 14th close. Alright, next we have this one, which is the candle that forms this fair value gap. So inside a 3-day look back, we do have this candle that forms the fair value gap, and then same thing, we have the high, we have the close, we have the open, and we have the low. And so this high can take that and extend it. So the high of that candle is 106.537. Alright, so 537. The low of this candle is 106.549. So 549. So from 537 to 549, that's about 12, I think, pips is the units. So it hasn't touched it yet, and now on a smaller time frame, this level is very important. Let's say we don't touch it by London close. I would place my focus on this high going into New York AM session, and then yeah. So let's see. We got the weekly chart with the new week opening gaps. We got the daily chart, and we've outlined the fair value gap. We've outlined the weekly chart. We've outlined the monthly chart. So screenshot this. And then now I'm going to add the new week opening gaps just for my logs. Not these ones. Alright. So just this. And then you can see how these new week opening gaps are very in confluence with that fair value gap. So I do think that we can have some sort of nice reaction here, but it would be even better if we just don't even trade into that fair value gap, and it would be even better if we don't even touch this high of this candle by London close. So I'm really giving it room to just waddle around and like grow and give me more intel basically, but I'm setting my expectations for this week basically. And screenshot that. You can't see my screenshots, but when I say I screenshot it, you're basically looking at the screenshot. I have a little script that takes a screenshot and places it into my folder automatically. So I'm not using the window key snipper. I'm not using the TradingView provided thingy-majig. I'm just using my own script. Alright, 4-hour chart. Now, new week opening gaps. Before we go into the 4-hour chart, new week opening gaps I only have on weekly and daily charts. Or sorry, I have them on the weekly and daily charts, but they go as low as a 1 minute. Basically, I don't place my new week opening gaps on a monthly chart because it's too high of a time frame for me, and especially right now with how the new week opening gaps just look visually on the chart on the monthly, it makes no sense to me. So notice how we've went up from here on the 4-hour chart, so this swing low, and then we've consolidated around an older level from exactly a year ago, about just over a year. But you can see how just beautifully that it's not really beautiful, like in terms of, I guess, the retail eye, consolidation is not appealing, but it does look, it's very satisfying to know that from the beginning of October I had been looking for higher prices on dollar, and to see it come up here and stall around and then consolidate and still provide a risk off scenario in the marketplace, it just tells you how important this level is. The fact that we consolidated around, every time we created a swing low we came back up, and then every time we created a swing high, we came back down. So that is classic consolidation, but it's very beautiful. And then so I would once again, same thing, take off the new week opening gap, full screen, and screenshot. So screenshot that so you can see. Well, let's take a look at this wick right here, consequent encroachment. We came down into that, sweeping these sell stops, and we came into the daily fair value gap. So lots of confluence, inversion level, sell stops, daily level, all in one, occurred right here on Friday. And then now we're just consolidating. Sunday open. Let's see where this thing wants to go, basically. So there are those levels. Now, I'm not going to remove any levels just because we're so zoomed in, and if it's inside this frame, it's important to me now, if that makes sense. So we can see new week opening gap, October 15th. It's just a very nice level to be watching this week. And the fact that we came down right here, sell stops, inversion, wick, consequent encroachment, I do think that this can start to attack this high here, 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 here. It's very nice. It's too clean, and I don't want to draw it out, but trend line liquidity, smack it, and then run it. So smack it and run it. That's what I'm thinking. And once again, the faster this happens, the better, because that really means it's bullish. Alright, screenshot that. And then now, I would pull up my new day opening gaps. And so, right here. So you can see premium new day opening gaps just from last week. We have Friday's new day opening gap right here, and if we were to just come up into the low, that's essentially that high right there, short-term high. And then if we come up into the consequent encroachment, that's this high right here. So say we're to go up into that, and let's just say it didn't book this high yet, I would use this as a level or a measurement, and I would treat it as support from this low to this high. I would use this entire area as support, and then look for this high. And because we do have further targets from the monthly chart above this high, which are like further above this high, I would want it to go up and then come down. It doesn't have to be perfect, but I would want it to come down into this, tap it, and then run up higher. And then yeah, so that was premium, the premium side of new day opening gaps. And for discount, we have the new day opening gap from Thursday. So once again, the level that I wanted to see was here, but it can run lower, and I would just start looking for these bodies to clear these bodies if we run lower, and then I would look for any sign of reversal. But accumulation on the daily chart is in this fair value gap, and then there was the level that I gave you, which was last week's low, as a level where I would, if it trades to that, that would negate the idea of any bullishness for me, and I would take a step back, turn off my mouse. I mean, this is just like a not literally, but I'm just saying, I would take a step back, turn off my mouse so I can't click anything, and just put my hands on my butt or whatever, sit on my hands, and I would just watch it and wait for something convincing, that like a shift in market structure that is like an elephant displacement. Sometimes I feel like the words I say don't make sense. So let's see, did we screenshot that? No, we didn't. So I'll screenshot this too, all these levels. Now, just to kind of make things a little cleaner, I can remove this just because I don't really want it here. That's why. You can have it, but I don't really want it. And then once again, to clear things up a little more, just start clearing all these levels, because these are not what our focus is on. So this just helps increase my focus on where the market is right now, where it can go, and then where it's likely to go, if that makes sense. So once again, look at my cursor, where the market is right now, where it can go, and where I believe it's likely to go. And then screenshot this, and down to a 60-minute chart, you can see that like how much changes, how much we're zoomed in. So actually what I would do is just screenshot this first thing, because there's really not much more to add here, other than the fact that we have this new week opening gap, but I will add that in a second. There's a reason I'm holding off on that. Nothing important, it's just organization. That's the only reason. But it's important to remember all these levels. So I know that this gap is the new week opening gap. I know that this gap is the Friday new day opening gap. I know that this yellow level is the 20% retracement, and this is the 30% retracement. I have everything in a way that I can view it, and I know that, like, I know what the levels are. I can pull it off the top of my head, and I also have it labeled right here. So screenshot. Alright, so because we're on an hourly, I'll just zoom out a little just to capture last week's open, basically. So basically I'm just looking for Sunday. So right here. This is good enough for me. So we have this view, this is the view, and now you see why I believe that, you know, we can start attacking these highs, and I'm open to the idea that it trades down, but my targets are here. And it would be very satisfying to see a run up, like a big large candle that eats into this buy side here and here, sort of in one candle, whether it be a 4-hour cycle or a 1-hour candle. I wouldn't expect it in like 5 minutes, but in a 4 hour or 1 hour candle, it would be very nice to see it up, basically. Alright, and screenshot that. Alright, so that's it for the dollar analysis. Let's see. Mark your Monday opening. But first, I'm just gonna go through the new day opening gaps. You see how I'm turning it on right now, and it's not showing up? That's because it's not in this frame or this view. So if it's not in this view, it's not super important to me, just because this is the range from this low to this high where the market is working right now. So that's why anything from this low to this high is important to me. That means this, and this, and this high. Cool, right? Alright. So I'm kind of getting tired now, but I'm gonna finish my analysis. I'm just gonna listen to some music to hopefully wake up a little, and then anything important I'll say, but the idea is that I'm going into the analysis with a bearish bias for the week, but obviously we know market efficiency paradigm, the market is going to go up before it goes down, and same thing with the dollar, the market is going to go down before it goes up. So we're looking for that signature, and yeah, so I'll point out anything important towards the end, and I'm just going to go through ES and NASDAQ real fast. I'm hoping that I'm only here for another 30 minutes, and I'll be on mute. Actually, I just realized I forgot to point out that new week opening gap. So for that, now what I would just do, no different than what I would usually do, and I would say note the new week opening gap, or whatever, you can do new week opening gap, current new week opening gap, and that's for week 47 enabled. And so that just tells me that the chart before didn't have this new week opening gap, but now it does. And so now looking at this thing, we have the Monday opening, we have this new week opening gap, and we have all the data behind us. I really like the idea of it trading up higher on this chart up into these this consequent encroachment of this candle. And that would be treating this as inversion, so support, and inversion for support. And then I'd start measuring all these other highs. So I don't know if that's confusing. I don't know if that makes sense, but it does to me. So I'm not really trying to teach. I'm just showing you what I think. Alright, so just wrapped up NASDAQ analysis. So gonna just quickly finish this up. And I mean, I already communicated this on, what was it? Let's just go to the 4 hour for all analysis right now. Basically, without saying too much, or stretching this too far, I said I like 59.50 for the latter portion of the week. That's what I'll be watching. So that's Monday, Tuesday, Wednesday, and then Thursday, Friday we'll have to see where we are, what's happened, and then where we're likely to go next. So 59.50, I like that as a draw on like a right now where we are. I like 59.50 next. Let's take a look at the economic calendar. So for this week, not too much on Monday. Building permits Tuesday. Actually, I'll pull this up on my current chart. So right here, this is the economic calendar for this current week. That's the 47th week of this year. You can see today, right now, well actually I'm not going to create too much confusion, but Monday, G20 meetings, okay, all day. This won't create too much of an impact. It's not high impact. 8:30 building permits, that could provide a little juice, but it's not a huge catalyst. Crude oil inventories 10:30 a.m. on Wednesday, okay, and then we have the first high impact news on Thursday. So that's why Monday, Tuesday, Wednesday, I'm breaking the week into 2 portions and allowing for Thursday and Friday. Basically, I'm waiting to get to the transition from Wednesday to Thursday so I can see what Wednesday, Tuesday, and Monday has all done, and has it reached 59.50 flat. So I'd expect this to act as inversion, come down into it a couple times, and then start to work from 59.50, or start to work towards 59.50, and then from there I'll see. Maybe I'll give a midweek update. NASDAQ, not my focus on indices. Typically it's S&P and then NASDAQ second, like a secondary analysis. But look at how this sell side imbalance, buy side inefficiency, typically this would be, we go up into it, bump up into it, and then trade lower. But just like the same thing over here. So because it's the same, it should be the same time to 10 a.m. So it's as simple as copy paste right here and right here. Is that a volume imbalance? No. Yeah, it is actually. No, it's not. Oopsie. Alright, so that low, it's anchored to that low. Same thing for this. You can see that the NASDAQ is a little stronger right now, but or it is trading above the inversion consequent encroachment. So my draw for NASDAQ, I would say 20,800. So that would be the new week opening gap. low right here. New week opening gap low is 20,850, but I like 20,800 flat, and that is same idea that it returns back to these monthly levels. So I always have the last month monthly high and low on my chart always, and it's pretty common that the market goes up into those levels and touches those levels. Maybe not as an entry. It's not the best idea for an entry and exit, but the idea that it's gonna go down and up and touch those levels in the process is always a nice confluence. So that is it. I don't think there's anything else. If anyone was here, I hope you enjoyed. I was quiet for a long time, but I was just chilling. So I'm gonna finish my water before I end the stream, and then I'm gonna end it. So till then, if anyone is here in the chat, can say something. I'm dead. Cool. I'd like to see this trade lower, but it does have room to trade a little bit higher, but I would prefer it not trade into this sell side imbalance until we create a new low, basically. So one more low or one more lower low, and then I'd have to just reassess. So it's basically the idea of running down equity. So if I were in a position from, let's just say, Monday or Tuesday, even Wednesday, if I were holding a position and I was short above the opening of Wednesday's open, we'll say that, I would have a limit below here and then allow it to run obviously it's a little hard to say because I don't have a full position, but the idea, what I'm trying to get across is that if I were holding a position from anywhere above here at a proper entry, I would exit below here, or just scale or take a partial, run down equity basically. And then same thing for the euro. You can see we came up into that fair value gap. So I'd like to see the reaction of this pursue this low. So new low below here. And I'd like to see this remain open. But I'm not a Forex trader, so this is just me kind of throwing it out there. I don't condone anything Forex or whatever. Maybe not now. I haven't back tested enough, but yeah. Anything else? Just gonna show coffee real quick. There's something really cool. Very, very cool. So coffee, let's see. It's hitting at 283 right now. Who could have ever predicted something like this? I mean, it's impossible, right? Impossible. Right? Impossible. Alright, so I think coffee new highs above here. I'm buying up all the coffee at Costco next time I go because I want it, right? And it's gonna be expensive. It's already pretty expensive, so if you're watching this and you like coffee, you know, shit's gonna be expensive pretty soon. Just take a look at this. Caffeine is a drug. So imagine like the effect of the quote unquote, well, not quote unquote, because this is a real commodity. So imagine the supply and the demand when, you know, excuse me, imagine the demand when the supply has drastically decreased, and you know, for whatever reason, I'm telling you right now, I'm telling you, I'm putting it out there, November 18th, 1:38 p.m. New York time, Central Standard Time. There's going to be a headline that's, for some reason, it's going to constitute coffee going higher, and it's going to be at all-time highs, and the exact number for that is 308.90. So coffee's going to be at all-time highs. Sorry, that is not all-time highs. This is all-time high right here. So 339.90. But 1, 2, 3, these three highs, it can just boom, I'm telling you. And then there's going to be a headline wherever coffee is. What did they do for cocoa? You know, there was a supposed strike or something, or it was, you know, look at cocoa. What is cocoa? I can't remember right now. I'm blanking. But some BS reason cocoa went up, and it's going to be the same BS reason that coffee goes up. It's TV guide schedule, basically. So I'm expecting a headline for coffee, and it's going to be very interesting to see what it is and how. I mean, it was on this call out. It does not show it on this chart for some reason, but December 27th, 2023 was the day I posted that. That was all the way back down here. All the way down here. This candle right here. And since then, we're all the way up here at the target. right here, 285. So very, very, very interesting, very cool. That just happened on Friday. Now, let's see if I have anything else to say. Follow me on TradingView. I might put some posts here. Since 2022, cool. But yeah, you can see this chart. At that time, coffee was at 194.35. 194.35. So right about here. And that matches perfectly with December 27th. So, interesting.